We will just start. Okay. All right, good evening to all distinguished speakers. Dr. Liu from UCSI University, Dr. Abdul Ghani from the University of Muhammadiyah, Jakarta, Mr. Zhang Manwai from Malaysia Digital Economy Corporation, MDEC, the webinar moderator, Dr. Sitara Karim from Ilma University, Karachi, Pakistan. Also, our CEO, Dr. Camilo Felito. So we have a well mix of speakers from the academia and industry, as well as different countries. So I feel privileged to extend my warm welcome to all presented here on behalf of the Center for Market Education in this evening. First of all, I would like to thank our CEO, Dr. Camilo Felito, for giving us the opportunity and his full support in organizing this webinar. The Center for Market Education, CME, is a boutique think tank based in Kuala Lumpur, Malaysia. As an academic and educational institution, CME aims to promote multidisciplinary approach to economics and to spread the knowledge of a sounder economics and finance grounded in the understanding of the market forces. In order to do so, CME is not only involved in academic initiative, but we organize seminars, webinar like this evening, and tailor-made classes for students, journalists, business people, and professionals who wish to better understand the relevance of economics and finance for their daily lives and activities. So this evening, we will delve into the development of financial literacy in Asian countries and the challenges we are facing now with the rise of FinTech. We believe it will be very interesting to learn about the FinTech ecosystem in Asian countries and our readiness for a more transparent, digitized business world. So with that, I hope you will enjoy the evening with our speakers here. Dr. Stara, I pass the floor to you. Thank you.
Thank you very much, Consuls. Thank you very much for introducing us all. My name is Dr. Sitara Karim, and I am Assistant Professor of Finance, FinTech at Ilma University, Karachi, Pakistan. Today, we are bringing you an exciting session about the financial literacy in the FinTech era to have a comprehensive discussion on FinTech evolutions and current digital landscape of financial technologies. So let me explain how the session will progress. We have our three guest speakers to enlighten us with the FinTech and the current digital landscape. And I request the audience to please leave your comments or any questions in the comment box for each presentation. And we will have a separate question and answer session after all the presentations are done. And finally, I would like to invite CEO of Center for Market Education, Dr. Carmelo Ferletto, to conclude the session with his visionary remarks. So I'm going to start this session formally. First, we have Dr. Liu Chiu, currently serving as Assistant Professor of Finance at UCSI University, Malaysia. He was appointed as an executive committee member of the British Accounting and Finance Association Special Interest Group for interdisciplinary research in the field of accounting and finance. And his current research areas are also related to FinTech, finance and investment, corporate governance, and information economics. So I would like to invite him to shed some light on FinTech and the future of wealth management and investment, the emergence of Robo advisory service. So over to you, Dr. Liu.
Okay, thank you very much, Dr. Karim. So I shall share my screen now for my presentation. Okay, so I hope everyone can see the slides. So a very good evening to everyone. So my name is Dr. Liu. So I'm going to enlighten you on the issue of Robo advisory services, which is a very extremely important part of FinTech for wealth management and investment. So if any one of you out there who are planning to invest and manage your wealth, this is the future of investment investment, okay, using robo advisory services, which is an important part of FinTech, as I said. So, so let me enlarge the slide. So now, first of all, what are robo advisors? Okay, so here, robo advisors basically are digital platforms that give automated or algorithm-driven financial planning services with with no or little human supervision. So that means you don't have human beings running the show. So everything is basically you can say computerized using algorithm. So
sorry,
this
Liu.
is
Sorry, Liu, because I cannot see your slides. I don't know if it's only my problem or.
Yeah, I also cannot see the slides. Actually, I was about to interrupt.
Now can you see? Or maybe I share it again. Sorry.
Better stop sharing first and then try to share.
Okay. Okay, I stop share. Sorry. Yeah.
Sorry for that.
So I share again.
Yeah.
Okay. Okay, can you see now?
It is stuck, no, and Liu Chong has started screen sharing, but then we cannot see the slides.
No, it's not visible here.
It's not visible. Also, the public says not visible.
Oh, okay. So where I stop sharing first, maybe can anyone try to fix it? Just now I share can see, right? I don't know why now.
Let me try to open the slides that you sent yesterday.
Okay.
Oh, can I share? Can I share if it is possible?
Yeah. Please
sure,
try.
Sure.
Okay. Yeah. Okay, I'm sharing the slides.
I can't see you share. So
wait.
Okay.
Yeah, it is now share screen, and it is here. Share. Yeah, now can you see?
Yes.
Yes. Now I can see.
Okay.
Yeah. Okay. Thank you very much.
Okay.
So let me restart again. So the title of my presentation is basically FinTech and the Future of Wealth Management and Investment, the emergence of robo-advisory services. Okay, so can you let me handle the slides, or can you scroll down?
Okay.
Next slide.
Sure.
Yeah.
Yeah. Sure.
Okay. So the first thing, what are robo-advisors? So robo-advisors are basically, as I said just now, these are digital platforms which provide automated or algorithm-driven financial planning services with little or no human supervision. So which means that you don't have any human beings running the show or managing investment for the client. So everything is basically computerized, and basically it is automated and run by a computer algorithm. So this is basically the future of investment, okay, from the FinTech perspective. So if you are an investor who plan to invest in any securities that you are interested in, so this is the future kind of platform for you to manage your investment. Okay, so you'll be basically guided by, I would say, well, in layman terms, basically you can call it computers, but of course we have a special term here, robo-advisors, guiding you on how to manage your investment, what to invest, how much to invest, and so on. So a typical robo-advisor basically get the information from the clients, okay, about the financial situation, and also what are the client's future goals, okay, through a certain survey, and then use those data to provide the best advice to the clients. Okay, so this is how this robo-advisory works. Okay, so you try to gather as much data about the client and then, provide the best kind of advice to them. Now, what are the benefits of using robo-advisors? So the main advantage here is basically they are low cost compared to traditional advisors. So when in the past, when people want to invest, they have to pay a lot of money to hire investment consultant or investment advisor to get their expertise, especially for those investors who do not have sound financial knowledge. But with robo-advisory services, you can actually, get assistance and advice at a much more lower cost compared to the traditional investment consultant. So these robo-advisory services eliminate the need for human labor, and they provide the same kind of services as what the previous investment consultant provide at a fraction of the cost. So this is one of the major benefits of robo-advisory services. And robo-advisors basically charge an annual flat fee of about a range between 0.2% to 0.5% from the client's total account balance. And if you compare that with the typical rate of 1 to 2% charged by the human investment consultant, so you can see, it's a much more lower cost. And also another benefit of robo-advisors is that they are more accessible. Okay, they are available 24/7. You can, get the assistance of robo-advisors at any time during the day or at night, 24 hours, as long as you have the internet connection. So this is the benefit of it. You compare to invest in the normal investment consultant, where it is a human, then you have to wait for the working day and so on. But no, for here, as long as you have internet connection, you have access to it 24/7. And basically, it takes much less capital to get started, for investment, and the minimum asset required to register for an account are typically in the hundreds to thousands. I mean, this is for the traditional way, right? But using robo-advisory services, it's much less. And one of the most popular robo-advisors in the world, basically in the US, I would say, is Betterment. Okay, so it has no account minimum at all for its standard offering. Okay, so, and if you compare to human advisors, okay, they don't usually take on clients with less than 100,000 in investable assets. Okay, so, but, it's different for robo-advisory services. Okay, so, and for the traditional investment consultant, they prefer high net worth individuals who need a variety of wealth management and can afford to pay for them. But for robo-advisory services, there's no such requirements. So, for example, if a client want to, conduct a trade, traditionally, they have to call the investment consultants and they explain their needs and so on. But now with the robo-advisor, as I said, they gather all the data about the clients. Actually, they know about the clients, already beforehand, through the so-called machine learning. So, and with that data and preparation ready, so the clients can just click a few buttons and then, you can get a service from the robo-advisory services. Okay, so I've been talking about the benefits of robo-advisory services. Now, what about the shortcomings? Okay, so in anything in this world, there are always pros and cons. So on the other hand, basically, robo-advisory services actually limit the options for the investor to invest. So, so you have much more limitations here, so you cannot choose which mutual funds or exchange traded funds you want to invest in compared to the traditional investment guidance from the investment consultant. So, so this is one of the limitations of robo-advisory services. And also because of all those like the machine learning guidance and so on, there are many skeptics in the industry that have actually doubts about the viability of robo-advisors, okay, as a one-size-fits-all solution to wealth management. So, because you see, computers, they are artificial intelligence. So, and because they have all these machine learning techniques to gather all the data to learn about the client, so they are basically in the direction as if they can actually, provide services to any clients that are in the market. So it's a kind of moving in the direction of one-size-fits-all solution. So, but on the other hand, as I said, there are many people out there in the market who actually still have doubts about these robo-advisory services, okay, whether they can actually really serve all the different clients out there, okay. And another important thing here, another important shortcoming, robo-advisors have often been criticized for showing lack of empathy and sophistications, because you are dealing with computers, okay. If you're dealing with humans, you have the so-called relationship okay, in the picture, but when you're dealing with computers or so-called robo advisors, okay, the term used, basically you're dealing with machines. Machines do not have any feelings, any empathy towards you as a client. So this is one of the downside of it. And of course, you also have sorry, the previous slide, please. I haven't finished yet. Yeah, sorry, the last, okay. So there are also good robo-advisory services for people with small accounts and limited investment experience, namely the millennials, but these are actually far from sufficient for those who need much more complex services. So in other words, the robo-advisory services are more for smaller accounts and cater to the younger generation. But if you're dealing with investors who need complex financial management, such as estate planning, tax planning, and so on, in my view, the robo-advisory services haven't reached that stage yet. Maybe in the future, but I think now is still work in progress to to manage all these services. Next slide, please. Thank you. And another shortcoming is that these robo-advisory services are basically ill-equipped to deal with unexpected crises or extraordinary situations. For example, here I give an example here. If a young person's parents pass away and they receive an inheritance, so so if that person let the money governed by robo-advisors, I don't think this is a wise decision because as I said, robo-advisory services have not reached the stage where they can manage very complex financial management needs or requirements or services, right? Especially during a crisis. And also a study conducted by Investopedia and the Financial Planning Association actually found that consumers prefer a combination of human and technological guidance, especially when times are rough. Okay, and according to the report, 40% of the respondents say they would not be comfortable using an automated investing platform during extreme market volatility, like now COVID-19. So this is the feedback from the market. So people are still skeptical about robo-advisory services, and at the end of the day, they still prefer a mixture of human and machine guidance for the investment, because you're dealing with money here, you see. Next, please. Thank you. And also another shortcoming, robo-advisors operate on the assumption that clients have defined goals and a clear understanding of the financial circumstances to begin with. But this may not be the case for every single investor. So this is another downside for these robo-advisory services. Okay, so and robo-advisory services answer questions like, is your risk tolerance low, moderate, or high? So it presupposes the user has a fundamental knowledge of investment concept and the real-life implications of each choice that they actually choose for their investment. So there are a lot of assumptions being pre-programmed into robo-advisory services, which is basically, it's not effective enough, because we know a lot of investors out there have different level of financial knowledge. So as a conclusion, nevertheless, robo-advisory services, although there are a lot of shortcomings as I discussed, it is still the future trend of investment, as the entry of robo-advisors has actually broken down some of the traditional barriers between the financial services world and the average consumers. So basically what I'm trying to say is that robo-advisory services have actually helped promote financial inclusion into society. That means more people can actually have access to investment guidance and wealth management, as compared in the past where only the very rich can afford to hire the best investment consultant. And because of these robo-advisory platforms, sound financial planning now is accessible to everyone, like what I said just now. So not just high net worth individuals. So that's all for my presentation. So I thank you very much for all who have listened to what I presented. So now I'm open to questions and answers. Any questions?
Okay, thank you very much. So actually, we will have the question and answer session at the end. So I would request the audiences to please drop their questions here, and we will share the question and answers at the end.
Okay,
So
okay.
thank you very
No
much,
problem.
Dr.
Yeah,
Liu.
yeah, welcome.
Yeah. So now I would like to introduce our second guest speaker, Dr. Abdul Ghani, who is currently member of the Committee of Integrated Governance Bank, BRI Group, that is the biggest bank in Indonesia. He received his PhD in Islamic Economics from State of Islamic University, Sharif Hidayatullah, Jakarta. And Dr. Ghani set up several fintech firms in lending, insurance, and venture capital. Today, I would like to invite him to have some insightful discussion on the potential and challenges of fintech Indonesia experiences. So over to you, Dr. Abdul Ghani.
Okay, thank you, Dr. Stara Karim. I will share my screen first. Can everybody can see my screen? Okay, thank you. Thank you, everyone. Thank you, CMA, for inviting me in this webinar. It is my honor can discuss and speaking with all of you in this evening. First of all, let me introduce myself. I am Abdul Ghani, a lecturer from the Muhammadiyah Jakarta University. In the next 20 minutes, I will discuss about three subtopics. The first about overview fintech in Indonesia, and the second about the potential, and the third about the challenges. Okay, next. Sorry. Okay, if we see the feature in the left feature, this is the numbers Indonesia fintech ecosystem. You can see most of the company is lending and payments. 70%. And for the payment, we have 3.3 billion US dollar in 2018 and increasing 6 times. In 2021, about 20 billions. So with the 5 billion transaction. And for lendings platform in Indonesia, we have 104 company actually decrease 66% before in 2020. So there is 60 players is bankrupt. But in the peer-to-peer lending in Indonesia, until now, accumulative, we already loan disbursement about 70 billion US dollar. Accumulative with the 70 million borrower. So it's huge in Indonesia. And my little research for the peer-to-peer lending from 104 company, 80% still losses, and only 20% have profit because 20 company they already have enough customer, and the volume transaction is for each more than 100 million US dollars. And the left and the right pictures is about the innocent payment method in e-commerce. Is in 2021 around 28 billion US dollar, mostly doing by the cash on delivery and also transfer. So only 3% using electronic wallet. So this is the Indonesia still, literacy and also increasing to do the cashless society. Okay, three slide. In the next three slide, I want to introduce some of the fintech company, various type and platform. You see the for payment is we see we already know GoPay, Dana, and Oppo is the three biggest wallet in Indonesia, and also we see the peer-to-peer lending. The three biggest of peer-to-peer lending. My note is Asetku, Credit Pintar, and also Investri. Is the three biggest peer-to-peer lending company based on the total loan disbursement. For each, they already $1 billion disbursement. And for the equity crowdfunding, is the new platform in Indonesia. It's only 5 company, I think, and Santara is still the leader because it's the first company set up in Indonesia. And the next crypto is growing now in Indonesia. We already have 8.9 million investor. It's growing and amounted transaction about $43 billion from January until September this year. So I think the crypto, Indodax and Toko crypto is the leading in this market. Okay. For the investment that Mr. Young said about the Robo advisor, in investment in Indonesia, a millennial is have growing awareness for the investment. Bibit, Ajaib, and also Bareksa Tanam Duit is the 5 biggest in the investment platform. Bibit have 5 million user already, and Ajaib they have 1 million user. For the InsurTech, we have Pasar Polis. This is the digital insurance platform. Sinarmas InsurTech is the digital insurance platform, and Pasar Polis, Future Ready, Koala, and Future is the broker platform. We also have a market comparison, Cek Aja atau Duit, and also the point of sale. So we already have many fintech platform. And the last is about the bank digital. This is the new thing in Indonesia. In this year, we have Bank Jago, part of the Gojek ecosystem. Also, we have neobank, is part of the Aku ecosystem, and the rest is only digital banking, not bank digital. For digital banking, for bank digital or digital bank is Bank Jago have 1 million user. And still aggressive to access to another 100 million user from ecosystem Gojek. And the neobanks commerce, they already have 10 million user now. It's very aggressive in the last month. And they have access ecosystem to the Aku as the lending platform in the e-commerce. We also have the remittance, transfer, and the wallets. This is example of the fintech platform in Indonesia. We have various type, but the problem is we only have several regulation actually. So this is still challenging. Next, potential Indonesian fintech. Okay, we have even we have the penetration internet only 71%, but the number is big enough. We have almost 200 million user in the internet, the same as with the smartphone user in 2021, almost 200 million, and expected growing until 2025 about 250 million user. So this is the baseline of the digital economy based on the internet and also the smartphone user. This is the huge potential market. And other thing is about the unbanking people. We have 92 million unbanks. This is so many people in Indonesia. They cannot access to the financial institutions. So with the fintechs, we believe that the low population can access the financial products. So fintechs will grab the untapped markets. Okay, and the capital market investor during pandemic, this is amazing. Before 2019, we only have 2 million investor in the capital market, but now we have 6 million investors, so 3 times increasing. Also in the mutual fund investor. So in Indonesia, investment is very is growing 2 or 3 times, not only for the capital market, mutual fund, and also in the crypto. Okay, that's a potential. And the third about the challenging in the fintech. I think it's only 2 in this session. I highlight the challenging in fintech. The first is about the literacy. This is the problem in Indonesia because Indonesia is relatively low. It's only 38% for the literacy because maybe government education institution they need to introduce and iterate about the financial and about the financial inclusion. We have some positive trend about 76% in 2019, and still banking sector have the highest the financial inclusion and also financial literacy. But another non-bank product, we still have big homework. And so the fintechs, we believe that can cover these problems. Another big issue about the lack of regulation for the digital financial or fintechs. We only have 4 regulation. Lending is POJK number 757 is in 2016, and for the equity crowdfunding we have POJK number 37, and the other is about the innovation financial digital. So all the other platform we capture under regulatory sandbox in POJK number 13. And the fourth is about the POJK number 12 2020 is for the digital banking. So I think it's not enough. We don't have specific regulation about the insurtech, about the about the aggregator, blockchain, etc. So I think this is still a big issue because we need to explore more the regulation to capture all the platform. So I think it's only this three subtopic I can share in this webinar moment. Thank you, everyone.
Okay, thank you very much for your presentation. We have one question here, but we, as already discussed, we will discuss the answer and question session at the end. But I have noted your question, Muhammadul Kareem. There is the audience from audience. So finally, we have our third guest speaker, Mr. Tang Munwai from Malaysia Digital Economy Corporation, that is MDEC, who is part of the instrumental force in facilitating the development of the local fintech ecosystem at a national level. For his contributions to the country's emerging fintech sector, he's recognized as one of the top fintech influencers in Malaysia in 2017 by FinTech News Malaysia. And he builds his repertoire in the payment, mobile application, and fintech scene at both strategic and execution levels. So I would like to invite Mr. Tang to share some significant insights on fintech landscape in Malaysia and emerging fintech ecosystem. So over to you.
Thanks, Karim. I'll just share my screen. Can you see my screen now? Can you see the screen? Okay, good. All right, good evening all. My name is Tang. I've been working in MDEC for the past 17 years, and the last 5 years, I was very much involved in building ecosystem for fintech in Malaysia. So when we talk about fintech, there are a few things because we talk from national level, so there are a few things that we have to iron out 5 years ago. So the first question we always ask ourselves is, because fintech was a big buzzword 5 years ago, what is Malaysia's opportunity and aspirations? As you know, Singapore was very, very strong and still very strong, and so is Indonesia. And look at Malaysia. What are the goals? How can we, Malaysia, can cement ourselves to be the emerging regional fintech ecosystem? So together with the Central Bank or Bank Negara Malaysia and also some of the associations, we actually came out with this. So, you know, the central bank drives the policies. What we do in MDEC is we drive the industry. So from the industry perspective, we carved out two big goals. Number one, fintech for Islamic banking and finance. Malaysia is still number one in Islamic finance, but fintech is still very much number two or number three in the technology side of Islamic banking and finance. So it's a totally different ballgame. The other one is fintech for developing economy. As you know, our economy in Malaysia is still growing with a GDP rate of 4.5 to 5%. And that tells a lot of stories on how can we develop even more using financial services, not just for the industry, but also for the people as well. So these are the two big audacious goals that we came up with in order to stamp Malaysia in the regional playing game. So just to give you a snapshot on what Malaysia is all about. So right now, GDP 2020 is about 1.389 billion, about 32.7 million populations. Digital economy growth to GDP is about 20%. 27 of banks, 15.9 million labor force, and the B40 household is about 2.91 million. It could be more now. Okay, and our private consumption is close to about 799 billion. So it's quite a big gap that we have. They look at it, it's quite a big gap that we have in terms of the development of the economy in contrast with the financial services that's needed in Malaysia. Okay, so another few more stats. Malaysia, I have to say, we are one of the biggest social networking users in Malaysia. Everyone has WhatsApp, everyone has Instagram, and one of the most popular one is TikTok. So I guess a lot of us here have TikTok, and we are very good in terms of using, you look at it in terms of using social services or even going digital services, 112% online banking penetration and 61% in terms of mobile banking penetration. When I talk about mobile banking, we are talking about anything that it could be online, or it could be on your web portal, or it could be your e-wallet as well. Okay. And look, debit card ownership is 143%, 30% of credit card ownership in 2020. Social network, if you take away China, right, in the ASEAN region, Malaysia actually is the biggest users of Facebook, believe it or not. I think probably the usage, you can say that probably 30 to 35% on political usage. Okay. And we are also quite good in terms of Instagram and also LinkedIn and other social media usage as well. So this will give you an overall view of what digital literacy we have in Malaysia. Okay, but saying that is not to say that we are actually good in it. I'll explain more to that. And this is some of the fintech landscape. A total, we have 200 over companies or fintech companies in Malaysia. And some of the, on the left side, you see some of the breakdowns, Of course, payment is the biggest part in Malaysia right now. You look at it, Malaysia actually has 56, my last count was 56 e-money license. So a lot of people ask, oh, Tang, we have about 50 over e-wallet license. So that is not the story. The e-wallet license is actually a subset of what came up from the e-money license, which more started as a payment gateway. Okay, and just give you an overall view on Malaysia is ranked #1 in actually the Islamic fintech as well, but there are a lot of other regions are coming up. So we have to be on our feet. So we do this on a yearly basis to see where are we positioned from the industry perspective. Okay. And just to give you a payment landscape, e-payment, I mean, all of us uses a lot of e-wallet nowadays, and an average person made about 170 e-payment transaction as compared to 150 plus. Of course, this is due to the pandemic. All of us started to use e-wallet, especially when government starts putting money into the e-wallet for distribution purposes, and this has already uptake quite a fair bit. And not only that, you can see that online banking transactions has grown 49% from 1.7 billion to 2.5 billion. E-wallet transaction from 0.3 to 0.6. And merchant registrations for QR code. When you go and scan a QR code, every QR code has to be registered. A significant jump. And I have to say that this is all due to the pandemic. So there's something positive coming up from the pandemic at this moment, as where everybody is more towards more acceptable in terms to using digital payment. And other payment landscape, you're talking about remittance. Remittance has quite a fair bit of market in Malaysia. A few years back, I remember reading in the papers, the amount of transaction that was recorded going to Nepal in 1 year is close to 1 billion. And these are all those are recorded, and because there are ways that you can go through the kongsis, where they actually remit money back, which is not accountable, which is on a different path. So remittance is also a big share of the fintech ecosystem in Malaysia. So we have a lot of remittance players at this moment. And of course, when you talk about digital payment, you cannot run away from this. So this is the top 5 e-wallet players in Malaysia. Touch and Go, as you all know, has about 15 million users. Number of merchants is close to 300,000. Boost has about 8.8 million. I think my last chat with Boost, they have about close to 10 million now. GrabPay was just registered in US. It's one of the big users in Malaysia, about close to, the number of users is not disclosed because they're not a local company. Maybank to you, sorry, this is Maybank MAE. Always get a bit confused when it comes to Maybank because they are approximately 500, 500,000 merchants, and Big Pay Air Asia approximately 800,000. But this is stretched across regional. Okay. Hang on. All right. So digital bank, as of 31st of December last year, this is the last year, Bank Negara, our central bank, issued a licensing digital framework for digital banks. And it stated that it may issue up to 5 banking licenses. And the more important thing is the license framework is to seek innovative business model to support Malaysia's underserved and under-market segments. It's very important. Okay, so the licenses will be granted in Q1 in 2022. It could be announced in the Malaysian FinTech Week 2022, which is happening from January 24th to 28th of January next year. So there'll be a furthermore few surprise announcements. We'll have to see what will be going on from there. And you talk about the applications criteria. Number 1 is always to commit to drive financial inclusion. This is really, really important. Despite the numbers of social, the unbanked population in Malaysia is close to about 97, sorry, the bank populations is close to about 97% in Malaysia. But after 97 bank population, how many actually uses your banking or your bank financial services? Very rare. All of us, most or even all of us, you can ask yourself, have you subscribed to any of those banking services that's provided by your banks? Besides taking on home loan, car loan, that's about it. You know, so there are several challenges that we are facing right now to ensure that financial inclusion is actually the problems of financial inclusion being tackled on. So I always look at the population in Malaysia into 3 categories. You have the urban areas, you have the suburban areas, and you have the rural areas. Of course, the urban areas, I don't have to say much, everything is there. Practically, you don't even need to use an e-wallet when you have ATM every kilometer away, you can find an ATM. Okay, but once you move towards the suburban areas and the rural areas, that's where the challenges are. Banks would never put a branch where they find that it's not feasible at all because of the OPEX and the CAPEX. So that's one of the main challenges that we are facing right now in Malaysia. Number 2 is they have to comply to strict regulations. The FSA Act, the AML, CFT, these are some of the, I think every country, I think in Indonesia, Singapore, Thailand, they all have to comply exactly to what other banks are doing as well, the conventional banks are doing. And then you have to demonstrate viability and sound operation, which means you have to ensure that you have enough capital. For your information, Malaysia has not have one bank that goes bankrupt. So Bank Negara doesn't want e-bank or digital bank be the next one in line to go bankrupt. So that's one thing for sure. Safeguard the integrity of stability of financial system. And also the last one, a strong value propositions to demonstrate a business plan that fulfill financial inclusion. It's not just about the digital banks that comes in. It's not just about talking about rural, central areas. You have to talk about not just urban areas. You have to start looking at innovations. How do you tackle suburban areas and also rural areas as well? So it has to have a lot of governance and it has to have a lot of cybersecurity. One of the big issues that we find that in Malaysia is not just on financial literacy, but there's another big problem before that is digital literacy. Yeah, you might be saying, Tang, you're going against yourself. Previously, you were saying that Malaysia was so good in terms of social networking. But when you talk about using financial services, right, there are a lot of things. Like, for example, an app, it has to be updated. How many of us actually, or our parents actually update their apps regularly? We don't. So the digital literacy is still a big hurdle for Malaysia to overcome. All right. And just to give you some background, this is as of September 2019, right? Malaysia, we have 2 regulators. One is Bank Negara, who is dealing on deposit takings, and the other one is more onto capital market, which is Securities Commission. In MDEC, we deal with both regulators as well. And just to give you a snapshot, 70 successful campaign was done in 2019. That one is on the red. It shows that there's this year, 2020 itself is about 80. And sorry, it's in 2020, so 80. And we actually raised from 65 million in 2019 to 199 million in terms of equity crowdfunding, ECF. And these are some of the regulators, operators there. And in terms of P2P financing, in 2019, some snapshots, 6,222 campaigns were successfully launched. In 2020, the numbers went up to 7,760. And in 2019, up of probably 500 over million were raised. And surprisingly, in 2020, 1.35 billion were raised via P2P financings. Because we look at both of these as an alternative way of doing financing, which is getting a big hit in Malaysia right now. And this is some of the snapshots on what are the timeline, what are things that we're moving towards in terms of what's happened in Malaysia. In 2020, of course, our Bursa established wholly owned subsidiary Bursa Rec, and then capital market. The important milestones like 30th of June 2020, Bank Negara issue a policy on eKYC, okay, for remittance and also money exchange providers. SC launched the securities assets. That's where we have 4 licensed, we call it RMO right now, registered market operators in Malaysia. That's where you have Luno. Those are the ones that's categorized under digital assets. Okay. And from MDEC perspective, what is our role in how are we developing the ecosystem? So we look into 3 particular segments. Number 1 is, of course, working with the regulators, and part of my digital economy framework that was launched this year, earlier this year, is to establish a FinTech Innovation Accelerator Program to help the growth of FinTech startup regardless they are local or foreign. Okay, so we are working very closely with the Central Bank and also Securities Commission on that. Number 2, what MDEC always do is always about capacity and capability development of FinTech startups. So when we say GAIN methodology, we use is growth, amplification, invest, and also nurture. Invest here doesn't mean that MDEC invest, but we have a lot of players in the ecosystem who is doing fundraising, who helps to put things together, and we also have investors, VCs, to help to put together to see which FinTech they want to invest in. And we also work with a lot of corporates as well. And the third one is all about community. So what MDEC does is we collaborate with regulators, corporates, or even FinTech in deployment digital means of reach currently for financial excluded and underserved populations. I will drill into a bit more in a few slides later on these 3. These are some of the FinTech ecosystem players that we work very closely with. Of course, the list goes bigger. I can't fit much logos into it. On top is very much on the regulatories and also the policies players. On the bottom is very much on the how do we do industry development. We work with cut across from talent development to regulators to corporates to also financial institutions as well to VCs. So this is just a snapshot on who do we work with. And one of the biggest the story about FinTech Booster is how it was born. I mean, 2 years ago, MDEC did a survey with Bank Negara, and we found out that 90% of the FinTech startups are having issues with legal and compliance. That's where Central Bank was getting roughly about, they were stuck with about 100 over applications into their sandbox. And most of these applications corporates or even FinTech startup who just wants to go in and just apply for license. I mean, they don't know exactly who is it for, why is it for. They just look, okay, why not just try to apply and see what Bank Negara gives me. So that's not how it works. So when we sat down with Bank Negara said, MDEC, why don't you do the industry development? Let us do more on the policies. That's where FinTech Booster was born. So it's actually a program to help to provide capacity building for all the FinTech startups, regardless they are local or foreign. Okay, there are 3 pillars we're looking at. The first pillar is legal and compliance, which was launched. We did a pilot that was launched about close to a year now. And we're going to launch the second portion of it, which is more towards on business model and market access. And the last one is on technology, is more on towards APIs. So in terms of business model, we're talking about fintech startups, regardless they're local or foreign, that wants to invest in Malaysia. We help them to grow through our channels on what we'll do best in MDEC. And this is some of little bit more details on the whole fintech booster. What is it all about? Of course, we work together with Securities Commission and also Bank Negara for this. And the first one, we provide legal and compliance, business development, technology, amplification as well. And to give you a snapshot on how far have we progressed on the legal and compliance, we have onboarded a total of 12 legal partners. And out of 12, six of them are Sharia compliance legal partners. So you have the likes of, these are top firms in Malaysia, Zaid Ibrahim, Richard Wee, Lee Modane, PwC, IPFIM, Izwan and partners. And the next question I'm always being asked is, Chang, these are top legal firms. I don't have the kind of money as a startup. This program is done free. No charges at all, no hidden charges, no charges at all. All you have to do is go to fintechbooster.com.my to register yourself and submit your business plan. But there are parameters, okay? You must know exactly what are the intervention that you requires. So if you're just coming up with some ideas, I'm sorry, but it's going to be very tough for you to put you through to one of the partners. And the partners that we have are doing on pro bono basis. So what happened is when you submit your plan, you submit a business plan, we will review it together with Bank Negara, and we see that, okay, then we assign you a session with one of our legal firms, 2-hour sessions where you go straight and delve straight into the kind of legal and compliance information that you requires, or there's some roadblocks that you might want to see how to get past and go around it. So that's what we are giving on to all the fintech startups or even corporates as well. And not only that, our partners here, they even commit themselves to give a lot of public chats, public talks as well. So we do have a lot. So do check out FinTech Booster. We actually put a lot of information out there where we give out talks on Facebook or on webinars and all, where they explain more in depth of probably from the view of fundraising, from the view of eKYCs. At times, we even get Bank Negara come and talks about what are the policies they're looking at and this is where the Bank Negara interacts with the industry as well. Okay, so we have launched a pilot and we have reached about 500, 600 over users right now. Public programs completed about 28. We've conducted one-on-one 34 clinics with all the partners, and this program is still ongoing. And in Q1 next year, we'll be announcing in the Malaysian FinTech Week, the second pillar, where we have quite a fair bit of corporate partners are waiting to be part of this ecosystem. And of course, looking at building the regional, positioning Malaysia, especially in the field of Islamic FinTech, right? There are certain things that we have to do. I mean, I always say that, in Malaysia, we are not that good in telling stories. So one of the few strategies that we always put in place. Number one, we're actually pitching to the government to have some come from intervention to set up a national Islamic FinTech committee. We always hype about ourselves that, we are number one in Malaysia when it comes to Islamic finance for the past 7-8 years. But in terms of Islamic FinTech, we are not even close to anywhere there. But so it's time to actually look into it and to pull all the stakeholders together to develop a proper roadmap on where we should go from here. Number two is, of course, strategic partnerships. We gain market access initiative. We work across with a lot of commerce players or associations, not just in Malaysia, Philippines, Australia, the rest of the regions, and UAE as well, Dubai, Indonesia, we do have Singapore. So we work with multiple partners across to have market access so that our fintechs can grow. And of course, the third one is development of reports and publication on Islamic fintech and ecosystem. And that's it from my side. And if there are any questions, you can always refer to me later, or you can actually go to fintechbooster.com.my. So I hope this has been useful to you all. Thank you.
Thank you very much for such useful insights, Mr. Tang. it was very much informative for me, because Malaysia has been the, you can say I have graduated from Malaysia, and it is very much informative for me to know how far you have reached in terms of attaining the FinTech ecosystem. And interesting thing is about the, as you have mentioned in the last, about the Islamic FinTech. So that is also my area of research. So I would also like to collaborate in the future. Yeah. This was all from our guest speakers. I would like to invite questions from the audiences, if there are any. There was only one question from Muhammadul Kareem for Mr. Abdul Ghani. That is, what is the regulatory stance regarding cryptos in Indonesia, and why are so many people investing in cryptos? So this is the question from Dr. Abdul Ghani.
Thank you, Dr. Sitara. In Indonesia, for crypto trading is under regulator of commodity future trading agency. In Indonesia, we call Bapepti. So the crypto, not for currency, but crypto as asset. Even in the Ulama Council Indonesia is forbidden for the crypto asset and also cryptocurrency and also crypto asset without underlying. But you know, Indonesia have so many young people, millennial and zillennial. They're very interesting in new financial product like crypto, because I think this is the future, and this is transparency. You know, based on blockchain is very secure. So I think I believe that the crypto is have a huge future in Indonesia and also in the world. So I think the young people in Indonesia is very interesting in the crypto. Even Ulama Council in Indonesia is forbidden, but you know, Ulama Indonesia is still permitted if the crypto asset have underlying. In my forums, as also in the Sharia board supervision, they still studying about the crypto. Maybe in the future, we still considering to exercise about the crypto asset, but we don't know about the cryptocurrency. But this is about because the young people in Indonesia is very interesting, and the increasing of the number of investor in Indonesia is the young people. They very awareness about the investment and also the financial planning. That's my answer. Also for Mr. Tang, I think MDEC need in Indonesia because you know Indonesia still, you know, all the startup players they have some problem in Indonesia.
Okay, we have a question for Mr. Tang too, that why Islamic FinTech committee? Why not the FinTech committee?
Okay, the FinTech committee is already there for the longest time. So because Bank Negara, and we worked very closely, MDEC, Bank Negara, and also FinTech Association of Malaysia, FAOM, does have regular meetups on FinTech. And you can say that I would categorize FinTech and Islamic FinTech a bit separately, because what you have on top of the same committee is the religious body. Okay, so I would say, when it comes to FinTech, you have the highest authority is actually central bank. But in Islamic FinTech, the highest authority, the religious body on the federal level, is actually the king itself. So I would say it's a totally different ball game, and it's not easy to work on it, because you have to look from the religious perspective first before you can actually look into the kind of products and services you can offer out. Okay, so
Yeah.
that's why we are always separate. And also Malaysia being, okay, as I always mention, we are always position ourselves. Yeah, we are the best in fintech and the best in Islamic finance. But do you know that Dublin is one of the is in the top 3 when it comes to Islamic finance? Dublin itself. So we better go and start doing something about it, and get all the stakeholders together to ensure that we are doing the right thing. And I say, I wouldn't say the roadblock, but the biggest things that we have to really overcome is actually getting the buy-in from the religious body. As in Islamic fintech, the religious comes first, the products and services or financial services come second. Okay?
Yeah.
I hope that answers that. I'm being very deep.
I also want, I also want to add that Islamic fintech is actually a different perspective, but the fintech committee, or you can say the conventional fintech, is somewhat else. So we cannot combine both. One deals with the conventional finance, and other deals with the Islamic finance. So we cannot, you can say, integrate them. Therefore, it is very necessary to separate the Islamic FinTech Committee. Yeah, we have another question from Sylvia. She is actually my friend, and she is asking about the gender digital gap with regard to financial literacy and access to FinTech, and how we can address it. Yes, of course. I first invite all of the 3 guest speakers that how they see this gender gap, or you can say this perspective. Then I will add in the end. I invite my guest speakers if they want to answer about the gender gap, or you can say the gender digital gap.
Okay, let me go first. Okay, I think when it comes to gender gap, I would say that there's no gender gap, but there is a big issue when it comes to financial literacy and also digital literacy. When it comes, if you ask me, I mean, in Malaysia, I mean, from my perspective, from what I've seen on the ground, I actually seen the female genders are more, I would say, are more acceptive when it comes to digital, when it comes to payment and all, because they just want to get things done. And they are more intuitive in terms of it. I'll give a good example, right? We do give out, I mean, we do have cooperatives here, cooperatives in Malaysia. I spoke to one of them, and they told me, say, 70% of the loans we distribute out, I mean, I asked him, what's the NPL like, your non-performing loans like, he said, it's only about 1 to 1.5. I said, wow, that's really, really low. And how do you do it? They told me that only one simple answer. We only give out loans to women, because women are more responsible. Okay, and the same thing goes when it comes to digital literacy and financial literacy. The female gender tends to be more progressive when it comes to it, because I know my mom is more progressive than my dad when it comes to using a mobile phone. She was the first one that uses WhatsApp, and my dad was still lagging behind. So I don't see there's much gaps, but I would say that it's actually the literacy, the digital literacy part of it. That's my view.
Okay, from Dr. Abdul Ghani, do you want to add something about the gender digital gap?
Okay, thank you, Dr. Sitara. I think the same in Indonesia. We have, almost 90 million micro business, and then the micro business managed by the woman. So because that Mr. Tang said the woman is more responsible, the collection ratio is good, and then the fintechs can access the micro business. Like using the GoPay or Oppo and something like that, because if the merchant, food or mostly it's food, food and beverage. So all the transaction is recorded by the wallet, so they can easy to access the loan or also the payment and etc. So mostly in Indonesia the micro business is the woman, so there is no problem with the gender. I believe that the fintech will have much more for the woman business in Indonesia.
Okay, Dr. Liu, now your turn. We want to know of your thoughts.
Well, in my view, I mean, from the investment perspective, so from what from my knowledge and so on, so if you, let's say, you take from the corporate perspective, so I would say generally men are more, higher risk takers, so they take more risks. So if you link that to investment and to fintech, I would say, I mean, that's probably one of the reasons. I would say that men will be more take more risk in trying out, investment platforms like Robo advisory and so on. So, so I guess on the other side, on the other hand, for women, probably they are able to manage their risk better, compared to men. So, so I guess from the investment perspective, they possibly there could be a gender digital gap where I would say men are more inclined to use investment platforms like Robo advisory services compared to women. But it may not apply to other fintech platforms like what Mr. Tang said. So.
Okay, Dr. Liu, we have another question for you. That is, are most of the robo advisors designed for buy and hold? And would you prefer the buy and hold investment or dynamic trading investment?
Okay, that's a good question now. So I think in order to answer this question, one must understand what you mean by buy and hold investment. So buy and hold investment means once you invest, you just wait. I mean, you don't have to do anything, so you just wait for the returns to come. So you don't actively manage your investment. So that's what you call passive investment. And another name for it is what that gentleman mentioned, buy and hold strategy. So I do not think that the robo advisory services is solely meant to, in this direction to, to guide investors to buy and hold. I think it's more than that. So I would say that robo advisory services are more towards dynamic trading, where this is where it comes in, their artificial intelligence expertise. They have the data and they can actually tell you when to go in and when to go out, right? So I wouldn't say you just go in and wait for the returns to come. No, I think the robo advisory services also advise you when to actually sell your investment, when you add more money to your investment because the chances of earning returns are higher and so on. So it's a much more dynamic nature in terms of the investment management rather than passive. If you want to go passive investment, I don't think you need to go for robo advisory services. You can just you just invest in government bonds, which are basically low risk, or invest in exchange traded funds or stock index, and then just wait for the returns to come. You don't need all these sophisticated services. I think these kind of sophisticated services where artificial intelligence comes in is more for dynamic investment strategies. You really want to know when you go in, go out, when you want to add more money, when you want to reduce your investment level, and so on. So that's just my viewpoint. I hope I've answered the question.
Okay, thank you very much. Thank you very much for the comprehensive answers, and thank you very much for TK speakers. Now I would like to invite the CEO, Dr. Carmelo Carlito, for his concluding remarks on the webinar. Dr. Carmelo.
Thank you, Dr. Sitara. I'd like to thank you and Dr. Consuls for having coordinated the organization of this event and to have brought your contribution, your precious contribution as fellows of the Center for Market Education. And I'd like to thank also our three distinguished speakers, Professor Liu, Professor Goni, Mr. Tang. Thank you very much. I mean, I speak from the perspective of a fintech ignorant, and it is true what Mr. Tang said about women being more advanced in payment technology and finance technology. At least this is what I experience in my family, where I'm a very heavy cash user. I go to the ATM, take my cash and pay everything cash, while my wife has all the possible digital wallets that are available in the market. So I have made experience domestically about the gender gap that is in my against me, actually, I have to say. So, but kidding apart, I think that this webinar has given a contribution to the discussion about these technologies in Malaysia and in the region as well. So I hope that this one, that was probably our last initiative for this year, was something that our guests appreciated. It was a very intense year, I would say, for the Center for Market Education. We had a very strong 2021 with the publication of 5 policy papers, around 4 educational papers in 2021. We had 4 or 5 webinars with speakers from Brazil, from Harvard University, from the London Institute of Banking and Finance, from YAIS Malaysia, from Tennessee University. So it was really, really variegate year in terms of our initiative, important in terms of media presences. I guess that this year we got, since the beginning of 2021, more than 600 media mentions as Center for Market Education, thanks to the contribution of everybody. So I think that we are going to close a very important year for the life of CME. It was only our 2nd year, and hopefully we can even grow further next year. Next year we will start with a new initiative called Introduction to Political Economy. So we will have an online course of Introduction to Political Economy, which means introduction to monetary policy, to fiscal policy, to the issue of externalities, common goods, international trade, and so on and so forth. Hopefully we will get policymakers to attend, and we will start the promotion of this event very soon. You can stay tuned on our website and our social media, which are mentioned before in the chat box. So I feel very honored to have such good speakers and collaborators in this organization that is alive thanks to the effort that everybody put in it, and as we say, ad maiora. So hopefully the 2022 can be even better than this. So have a good evening, everybody, and Merry Christmas and Happy New Year, as we are in December already. And I look forward to seeing you again in 2022. Good night. Thank you very much.
Thank you.
Thank you.
Night.
Thank you.
Thank you.